Usapang real estate naman tayo. Ikaw ba, may bahay ka na?
Alam mo, Jello, matagal na rin kami nagbabahay-bahayan ni Daddy Crab. Pero syempre, gusto ko pa rin magkaroon ng sarili kong bahay.
Syempre.
Kaya naman dapat makinig talaga ako dito kay Rob and Ning dito sa Get Real.
Get real.
Now, last week's Get Real episode focused on the Tax Cuts and Jobs Act that was signed by President Trump into law before the end of 2017. We focused our discussion then on its impact to us as individuals, especially as homeowners. Now, if our Nation, you guys missed that discussion, go ahead and visit Get Real's Facebook page or YouTube channel to get in on the details, the good stuff that we discussed last week. But for today, we will focus our discussion on the tax law's impact on real estate investment. So good thing we've got Rob and Ning back to break it down for us and tell us how this new tax law will affect real estate investors. But first things first, guys, because this is a question that I've had for some time. What's the difference between a homeowner, a person who owns one or multiple homes, versus a real estate investor?
Nice.
Yeah, I mean, that's a great question. Right? Because you would think that if you invest in your own personal residence, you're an investor.
Yeah, I mean, that's
and
what
you
I like
are.
to think,
You
right?
are.
And you are. The difference is that the tax implications of home ownership as a personal residence, which is very, very good, by the way, which is actually even better than investing, because when you sell your property, if you're married, you get to exclude up to $500,000 of gain.
Oh, wow. Okay.
Tax-free forever, right? So, yes, you're investing, but it's called a personal residence.
Okay.
True investment is where you're investing away from your personal residence and you're investing for cash flow and multiple properties and
Passive income.
Passive income.
Okay.
Yeah.
Okay, great. Well, that might be an opportunity that some of our viewers want to take advantage of, because who doesn't want passive income these days,
absolutely.
right?
Exactly.
And investing in real estate may be just the way to do it. What are the highlights of this new tax law that would make it possibly beneficial then for real
Well,
estate
actually,
investment?
binabaan nila yung tax rate para sa mga passive through businesses.
Okay.
Yung passive through businesses, those are the LLC, yung mga S corporation, LP, those type of entities. Hindi sila nagpa-file ng sarili nilang tax return. Hindi kagaya ng C Corp. They file their own tax return. Itong mga passive through businesses, they don't file taxes. They just calculate the income and expenses here, the losses. And then kung ano yung maging net nun will pass through the owner's return, personal return.
So parang extension siya nung owner.
Exactly.
Okay.
So the good news is, dati ang tax rate nito is 36%. Ngayon naging 29.6%.
Okay.
On top of that, yung 20% nung revenue is tax-free.
Oh, wow.
Only 80% will be calculated on a 29.6% tax.
Great. So not only did they lower it, they also just decided to do away with 20% of
Right.
that, of what used to be 100%.
That's
Right.
Wow. Okay.
That's
So
big.
we need to clarify those are for specific types of entities that have, I guess, in essence, been made even more. Have been made as kind of a way to incentivize, or
Well, yeah, but that incentive is even for like the larger corporations like Apple and Google. They get the same benefits, right? So what we're talking about in terms of investment for us in real estate apply to those corporations as well, and that will bring money back over to America and hopefully create jobs.
So they were the ones that probably were in mind when the government is looking to make these big tax cuts for the corporations to bring that money back home. But as smaller entities, we can also avail of these benefits.
Right.
Yeah.
Absolutely.
Let me just add to what Rob said a while ago, yung tungkol sa personal residence versus investment property. How do we determine kung meron tayong hindi taxable yung ating gain when we say this is our primary residence? Kapag yung bahay na yon tinira natin ng 2 years within the last 5 years, then that is considered primary residence. Na ibig sabihin nun, anything, if you're single, at nag-earn ng equity yung property ng up to 250,000, that's not taxable. That's a free tax, free money for you.
Oh.
Kung married ka naman and you gain 500,000 up to 500,000 equity, that's not taxable either.
Wow.
So yun yung tinatawag natin na primary residence. That's how you will figure out, is this can I consider this my primary residence? If you live there for 2 years, from the last 5 years.
2 out of the last 5 years.
Yes.
Okay. Well, I imagine everyone's scenario seems to get a little unique when it comes to real estate, you know, where they live, how they've invested in it. So it's important that people have a direct line to you guys because, you know, especially in our community, maybe, who knows, maybe families want to get in on an investment together and they can incorporate together.
Oh, yeah, absolutely.
That's a great idea.
Buy
Yeah.
property
Highly
through an
recommendable,
entity. Yes.
Yeah, people that does not have, wala silang entity right now, and because of the new tax law, I mean, there's a lot of ways, we think, that we can maximize para maging beneficial yung tax reform sa sarili natin as an investor, real estate investor.
Wonderful. Well, that makes investing in properties maybe a little bit closer within reach. All right, guys, so let's go through the details once again. If people have questions and are interested to chat with you.
Yeah, sure, Ginger. Nation, you can call us at 888-860-9530, or you can visit us online.
Or you can go to our website po and you schedule yourself for a free consultation with your Robert or Ning.
All right, guys, it's always a pleasure to chat with you.
Thank
Make
you.
it so simple for Money Market Nation. Maraming salamat.
Thank
Thank you,
you.
Ginger.